And we are live. There we go. I told you always bigger on the screen. It looks different when we go live. So welcome aboard everyone, and thanks a lot for tuning into this Tuesday night live. I have another special guest with me today. I've got Wayne Murray from our investor relations team here in the B.Invested headquarters. So thanks for spending
Past probation.
Past probation, yeah. Thanks for coming in and spending a night with everyone. Everyone likes you, Wayne, and everyone always says to him on the phone, "Oh, Wayne's a gentleman. He's the biggest gentleman ever. He's always so helpful." He's actually I had someone today comment, and they said, "When I've spoken to any other property company out there, they're pushy, right? And Wayne is just so nurturing. He's like, okay, cool." And I've had to say, "Hey, can I sign the documents?" and all that sort of stuff. So. Yeah, it's good. Everyone loves you.
Ask my kids, different story.
Oh, it's different all the time, right? Eat those greens.
Yeah.
Cool, guys. Well, thanks a lot for tuning in today. Got the topic of there's not one size fits all property strategy. Today we're going to be exploring different reasons as to why and what, and some of the things that we've learnt with our investors over the years. Looking at some recent sort of properties that we've been buying for other people and what's happening out in the market. But as we always start off with, we are going straight into the news articles. And I don't have anything too crazy today. Last week, I actually noticed someone was telling me this morning that my video from last week's live, where they said that they were doing these things to the farm animals, right? Putting the needle into them. That video got shared like thousands of times, so they cut out a minute of that, and apparently there was some really good content in there. So it's not property related, but people
worldwide, mate.
Worldwide, we've gone global. So yeah. On that, let's go to our first article. This is an online global blackout of the banks, right? And this last week there was an article put out. So I just find it very interesting, right? We've talked a lot about the property market. We've talked about all that sort of stuff. I love deviating because it's not all just about the property. We need to understand the game board. If we're playing chess, most people just look at the chess piece and they're not thinking about the bigger board. You need to know about the board that you're playing on. And for the last couple of years, probably the last 4 or 5 years, I actually talked about social credit system, digital currency, removal of the cash and all that sort of stuff. It's becoming very difficult to get cash. If you go to a service station, I encourage anyone, look at whether you're going on holidays or a different location from where you are. Go and look at the banks. They're closing down, constantly closing down banks. There's less banks, less branches around. They're merging banks, all different things happening with banks. They're taking all the ATMs. There's no ATMs in a service station now. So you go to a servo, try and get money out. I went to 6 servos the other day to get $2,000 to go pay a tradie. And I went to a 7-Eleven. Finally, I found a servo that had an ATM in it, and then when I went to the ATM, I couldn't get out the $2,000, right? And I thought I'll go get $1,000 out. Couldn't get $1,000 out. Tried at 500. It's too much money you're having there. And I was like, what the fuck? Too much money? So I went to the actual bank's ATM and drove another 10 minutes out of the way. And we're being forced into this digital world and a digital system where the cash doesn't exist. If the money never exists, it was never yours, right? So if you can't get access to the money, it's always trapped in the system. You're always just playing a part of someone's system. And I find it interesting that we're now seeing coercion of problem, reaction, solution, right? So they create a problem, then they give you a solution, right? Everyone reacts, and then they give a solution, and that solution we saw happen the last 2 years ago with all the forced sort of mandatory things that they're doing for people. But now we've got forced coercion of different things that are going on. We've got the Optus hacks, right? Who finds it interesting that when the Optus hack went on, that who's the head of Optus nowadays? Do you remember? Gladys, yeah. It's like, oh, you moved from this department over to this department, and then now they're talking about rollout of digital identity bill and stuff like that, which involves KYC, know your client, stuff like that. And we're seeing this happen with Telstra now. We're seeing it happening with other big companies, big corporations, and now we're starting to see Osco go down. So last week was Osco outage cripples Australian banks, Westpac, ING, ANZ, NAB, customers affected. An industry-wide outage of major payment service has left Aussies without paying money, with complaints about the frustrating problem flooding social media. So if you can't get access to the cash, then you're forced to use these payment gateways. And I just question, like, why do these things go offline for? Why are they offline? It's just very odd. So just a question for the week. That was it. As we get into, I've only got 3 articles today, so they're a bit fun. This one here is an interesting one here. RBA Deputy Governor says there is still a path to avoid recession. What's the path to avoid recession? Let's go and take a stiff drink of water and unwind and think about what's going on here. Australia has one advantage over the international economies for avoiding a recession, the Reserve Bank Governor says. Treasurer warns of perilous path ahead. The Reserve Bank of Australia Deputy Governor Michelle Bullock says there is still a path for Australia to avoid going into recession. We still feel there is a path for us here where we can get inflation down, not go into recession, preserve most of the gains in unemployment we've had, Ms Bullock said to Australian Finance Industry Association annual conference in Sydney on Tuesday morning. Early this month, the RBA made the shock decision to ease interest rate hikes by applying a moderate 25 basis points rise rather than the 50 basis points predicted by the markets. I'll make the call within 3 days out from next, by the Friday. I'll say to everyone whether I think we'll see a rate hike or not. The next rate hike will be a maximum of 25 basis points, but I actually think we may not see a rate hike in November, and we won't see one in December, we won't see one in January because they're closed. They're closed. And I think between that period, we'll start seeing the markets unwind and fall apart because we are in a big recession. It was the first time the bank had offered some relief for customers after 4 consecutive half percentage point hikes in the last 12 months has wreaked havoc on mortgage repayments. Inflation is too high at the moment, Ms Bullock said. She explained that the decision to increase the interest rates by just 25 basis points was one which took the consideration of 4 consecutive increases of 50 basis points already made since May. The RBA released minutes from the October meeting of its board ahead of its moderate interest rate rise. When considering an interest rate rises, the board reflected on whether the community would question its resolve to reduce inflation. It might in turn prompt an unhelpful reaction to inflation expectations of financial markets if the community came to question the board's resolve to reduce inflation. It also noted the risk to household spending might increase despite the likelihood that interest rates would increase again in the near future. Ms Bullock said the RBA was uniquely positioned compared to its overseas peers because the board met 11 times a year. It means we can increase rates at every meeting and we can achieve a similar rise but in smaller increments. The RBA board suggested in its minutes that slowly adjusting interest rates would allow it to assess the effects of significant increases in interest rates and the evolving economic outlook. Wage growth has picked up but remains lower than other advanced economies where the inflation rate is currently higher, right? Currently higher than what? So when we look at that and we see, what they're doing, like the average mortgage, right? What would the average mortgage be? Most people, the area we live in, right? What would the average households be, right? They'd be on $1 million mortgage.
Yeah,
average,
800 to $1 million. 800
to $1 million. So the average household has now had their food going up. They've had their groceries, their petrol, their electronics, every part of their house gone up with inflation by at least 10%, so they're getting 10% less than what they had last year. But their mortgage, that might have been at 3%, has gone up by 2%, so it might be at 5%. On $1 million mortgage, they've lost, on $1 million mortgage, 20 grand a year, right? That's 20 grand extra they're going to have to go find somewhere by cutting back something, putting more pressure onto a recession. That's 20 grand. Like, that's a lot for most families to take on board. Now, the issue that we're going to see is that's what people have to pay, right? And with our investors and what we do personally, Wayne, we don't really see that issue because if you've got a property worth 150k, 200k, interest might have gone up, $2 grand a year, $40 a week. Who cares about $40 a week? You put your rent up by $50, you're still ahead, right? Yep. There's a greater opportunity to push the rent up. Yep. So I don't clean my house. I pay someone to come and clean my house. I don't clean the office. I'll pay someone to clean the office. We leverage things that we do in our life. When I take on debt and when I encourage and educate other people to take on debt, I don't want to pay the debt myself. I want to have someone else pay that debt for me, right? And I think that's where a lot of people are stuck, and I think that's where a lot of people are taking advantage of the opportunity out there, because rent's certainly rising. It takes me on to my next article here, but it is hurting a lot of people out there, but there's a lot of people that are doing very well out of this, and we've certainly seen it with the deal flow that we've had coming from the market. You might go and listen to the news and they'll say, hey, the sky's falling and we're going to have all these things happen, but they're not talking about the deals are falling over in the market because people want more money. When we're looking at the smaller end of the market, the rents have raised. There's an abundance of buyers at the lower end of the market, all these sorts of things. So, bit of a twofold market out there. Anyway, next article. This is the fun part. Shocking report. Shocking report. Shocking report for who? Not great news for renters with property availability at record low. So if people can't afford to pay for a house to buy, well then they're going to have to opt to rent. So it means that the rental pool is expanding, and it means that the rents are getting rising. So a bombshell report has provided some shocking insights into the dismal state of Australia's rental property market. The new report has highlighted the dire state of renting in Australia, with the number of affordable rental properties having halved since the start of the pandemic. The Market Insight report revealed the share of rental properties available for less than $400 a week has dropped from 41.8% at the start of the pandemic to just 19.3% this month. So out of all the properties that you would search for on the internet, right, less than 19.3% is under $400 a week. The other 80%, which used to be 40%, was under that. So inflation has pushed those rents up. Amazing for all those landlords out there. But do you notice something? What comes to mind when you hear that, when I read that? Anything come to mind?
No.
When I read that, I think, okay, when I look at all the thousands of properties that we manage for our investors, they're all under $400.
Yeah.
Well, they're all under $400,
Yeah.
right? So that pool is disappearing. The affordability at that level is disappearing. But we're playing in that market. When people say about risk and they say, oh, how risky it is to get into property or whatever the case may be, we're playing the lowest risk, because there's always going to be rental pool at that level, because there's an abundance. We're playing with bread and butter. It goes on to say the report analysed the number of rental properties advertised on realestate.com, concluding the worrying lack of rentals across the country. The data showed the number of properties available for rent for less than $400 a week has plunged to a historic low, according to report author Cameron Cusher. There's excess demand for rental accommodation where nowhere near enough supply in the market at the moment. That's driven down the number of listings under $400 per week to record low. Unsurprisingly, renting in capital cities proved to be more difficult than in regional areas. A number of rental homes available for less than $400 per week has fell by more than half pre-pandemic levels. Only 16.4% of listings were under $400 per week, and not a single capital city had more than a quarter of affordable rentals. The rental crisis is at its worst in ACT, Hobart and Darwin, with less than 10% of listings under $400 per week. In Sydney, the number of affordable rentals has halved in just 1 year. Regional areas have also seen listings under $400 per week slashed by half since the beginning of the pandemic. It's pretty clear that we've got some serious issues here in the rental market, particularly people on lower incomes. It's going to get increasingly difficult to find a rental accommodation because the supply of the cheaper stock has reduced quite significantly. They're talking about cheaper stock. They're talking about $2,000 a week baller places, because in a recession, that's where everyone's going to get hit. But when we start looking at affordable, sustainable properties, that's the market that we've been playing in for a very long time. People get fearful. I'd hate to think about the amount of conversations that I've had over the last couple of decades where people, last like 10, 15 years, where people are like, oh, you know, I wouldn't want to go and invest in that cheap end of town. I wouldn't want to do this. Those properties have performed the best throughout any market, no matter if it's a recession, a boom, a pandemic, things that we could never, So, just looking at it here, it's crazy.
Well, I'm looking at, I look at my clients' portfolios.
Yeah.
You know, I've got clients that have $1.2, $1.3 million worth of property.
Yep.
And they're getting $2,000 a week in rent. You don't go and buy a $1.3 million here in Kellyville and get $2,000 a week in return.
Exactly.
So,
You need 100 grand income just to pay your interest
yeah,
bill,
exactly.
right?
Yeah.
So you were saying beforehand, one of your investors, I don't know if we're going to talk about tonight or we're going to, yeah, we'll talk about that.
Sure.
One of your investors that has more rental income per week than what they earn per month from their job.
Oh no, she texted me
Yeah,
a few days ago. So
yeah,
yeah, and I think she's on 8 properties. She wants
yeah.
to get to 10 by Christmas.
Okay, cool.
Another 6 properties at 210 a week
Yeah.
will get her more rental income in
Yeah.
a week than she earns in a month. So
There we go.
yeah,
There we go.
and that's less than 12 months
From no properties, yeah?
on no properties.
No properties,
Yeah,
no.
so.
Cool. Cool. Well, lots of things to talk about tonight, guys. For those of you that don't know who Wayne is our investor relations manager here. Sorry, I just got lots of lots of questions coming in. Keep the messages coming through, guys. But someone just said here that rat's tail is the best.
It's about a foot long.
It's about a foot long now. It has grown. It's not. It's just sitting there today. It's not doing anything too crazy. It's tied up in a little bun. I've turned my rat's tail into a man bun. But what was I going to say? I got sidetracked from my cool comment about my rat's tail. But yeah, Wayne looks after our investors here. What do you do here, Wayne? I'll let you talk.
Nothing.
No.
When you walk in the office, I look busy. So.
Okay.
No, basically client relations.
Yeah.
Basically assisting you
Mhm.
in getting the deals across.
Yeah.
And right through to settlement. So,
Yeah.
constant contact. Try to keep up with all of my clients.
Yeah.
If I haven't contacted you in a while, let me know. Send me a text. All of my clients have my mobile number. So
Yeah.
yeah.
And same here. Everyone's got my mobile number. Not everyone that's watching. If you're a client of mine, then if you're one of my investors, you have my number. You can hit me up whenever. It's 10 o'clock at night. I'll still reply back to you and whatnot.
Mm-hmm.
But cool. And some of the topics that we're going to talk about is like, I think strategy is the biggest key, right? Like when people come in, a lot of people, I think, I've got to ask for some stats. So I had to go through some stats. We've got some stats for some new marketing stuff that we're putting out there. And it's about the number of millionaires that we've made, the number of properties we've bought, the number of 6+ properties we've bought, and all that sort of stuff. But there's less than 20,000 people that have 6 or more properties in the country. And we talk to thousands every day. Well, not every day, all thousands of them. But we've been a part of probably half of that portfolio to get there. And, we've had people over the years that come in and say, oh, I just want to buy a property. Tell me the hottest address. Tell me the best suburb. What's the hot spot? All that sort of stuff.
Mm-hmm.
But the ones that succeed aren't trying to find the hottest deal at the time. They're trying to build a strategy that's going to get them to retirement. And the strategy isn't really, one size that fits all. Which a lot of people think I may as well go buy a house and build a granny flat. I may as well just do certain things.
Mm-hmm.
What are some of the things that you've seen over the years?
Mate, I'm big believer in your sort of principles, and but it's you say this a lot. It's a taxi service.
Yeah. Yeah.
How to get to your destination.
Yeah.
The taxi might be brand new. It might be
Yeah.
dirty. It doesn't matter. It's going to get you to a destination. So.
Most people, if they had $500,000, if they wanted, here's another taxi analogy. I don't know if everyone's shared this one, right? But a taxi, right? If you had $500,000, you could go and buy a cool Lambo, right? Yeah. Most people want to go buy the Lambo, their house to go live in, right? But with the $500,000, you buy the car, you take the Lambo home, you've got to pay for service, you've got to pay for insurance, you've got to pay for upkeep, you've got to pay for all those sort of things. A lot of people just think that the car's a car, right? I've got $500,000, go buy a Lambo. But the way I see it is that you've got $500,000, you could go buy 20 Ford Falcons. They've gone up in value too.
Put them out to Uber.
Put them out to Uber, right? 20 Ford Falcons bring you an income, right? Those Ford Falcons, you can then, take that income and go buy the Lambo. Because if you go buy the Lambo today, then you're going to have to go and pay for all the upkeep, which will keep you broke as it is. You're tied to that car. But if you have the fleet of Ford Falcons out there driving around earning your money, then you've got cash flow coming through. With that cash flow, you can go and do things. And I think a lot of people fail to have that strategy that's going to work for them. And it's not, one size that fits all, because we both know that, some investors have a high income but they have no equity or have no savings, so they can't afford a deposit. So they need to, be focusing on getting equity. Some might have a lot of capital but need cash flow, and finding that strategy that's tailored per investor, which is very important. So, over the years, like, what have you found? Like, a lot of investors won't. One thing I've noticed is one of the things my biggest people ask me was, what is regret in investing. I wish I had a time machine, found the old version of myself, built the shit out of myself, and then go and do what I do today back then, right? But there was one point where I realised that I screwed up. I had opinions about buying properties in Queensland. I had opinions about buying properties with townhouses, units, and villas. I had those opinions, and what I realised over the years, I missed out on buying in Woodridge at 50 grand a townhouse, right? A 2-bedroom townhouse in 2004, right? They went up to 200,000 by 2010. The market went backwards to about 2013, 14, picked up again a little bit. And now they're probably like 250, 300K, most properties out there. And houses are like $500,000 out there now. But I had a fear that if I bought not in Sydney, then I couldn't go and fix a tap washer. I couldn't go and fix attend to certain things to the property. I couldn't manage it myself. And it's like, who'd want to manage a property, right? It's like the worst fucking job, right? Like, I've got property managers nationally, and that wouldn't be, if I said to Wayne today, you're going to work in property management, right? It'd be like, okay, right? Go away, right? Because it takes special people to work in property management, right? It's a tough job. And I see a lot of people that are like, I want to go and invest in a property to save, $20 per week. And it's like, it's not about saving. It's like, how can you have a system and a process that's going to, perform for you over time? I used to think going and renovating the property, I could go and change a tap washer. And it's like, I'm not a tradie. I'm not trying to quit my job to then become a tradesperson and, go and work on my own investment properties. So, a lot of people will want to just buy in their own backyard, buy in the area that they feel comfortable with, but not realising that there's a bigger market out there, which I think...
I got a client owns 8 properties in one town. And came to us.
Okay, yeah.
Came to us, and we've got 4 different areas that he's purchased in now. So
okay,
yeah,
cool.
So
I think I know that position. I'm just trying to think back because I see so many of them. I'm just trying to think of the person. But yeah. But if you just invest in one area, like if something happens to that area, like people would have thought, oh, Sydney's a blue chip, right? Imagine we have some cool properties in Sydney, but the Sydney market has not performed as good as the Gold Coast and Brisbane market. And we don't know when that next market's going to take off, but there's certain fundamentals which, we focus on when we're buying. I always said that the Gold Coast and Brisbane was like buying in Miami of Australia, right? And the Sydney was like where the GDP comes from, and it's the financial powerhouse like the New York. But we look at the last couple of years, and Gold Coast, Southeast Queensland's taken off crazy. That's the hottest market out there. And I have people today saying, "Hey Nathan, I want to buy in the Gold Coast. I want to buy in Brisbane." And it's like, well, you should have bought it beforehand, before the market went crazy. And if you had just invested in the Gold Coast, all in Brisbane, you would have done well today, right? But that's a risk because if you had it all in Sydney and Sydney didn't perform as good as that, well then there's risks that's attached.
Well,
to it.
Brisbane, let's say South Brisbane, West End area, a lot of supply there.
Yeah.
So there's no appreciation.
Yeah.
Only just now the appreciation's coming back.
You've got the people. Yeah.
So.
Yeah. They've had all the refugees coming from Sydney and Melbourne to Brisbane. So yeah, it's exciting because we've got to look at those areas, and when we buy in Sydney, we're buying properties in Sydney that are cheaper than what they were like 7-8 years ago, and we're looking at when migration happens to these areas and stuff. Like we can see them very easily just tick back up to where they were because you've got just like that rental article said, there's a shortage of that cheap, affordable rental property out there. And, they talk about how many times did you hear, oh, there's no suburbs, there's only, 10 suburbs left in Sydney under $500,000, right? And now there's nothing under $1 million and all these sort of things. So it's only a matter of time until all that dries up. And I think migration will be one of those big keys to fix Sydney back up, but diversification in that portfolio.
Yeah, spreading across different markets. So there's not just one market.
Yeah. Most people think there's only one market, and that's like either Sydney or Brisbane or Melbourne or wherever they're based. It's like,
I hear it every day.
Yeah.
I'll wait till the market changes, turns around,
yeah,
or comes down. Which market are you talking about?
Exactly. Did you know that, like, this is not for you, this is for everyone watching, like, did you know that, just as much as we've seen a boom in the last, 2 years, 3 years, there's been areas that have gone backwards, right? Just as much as we've seen, Gold Coast take off, that was flat and going backwards for a period of 12 years. It did nothing, it went backwards. Property is not linear, and everyone thinks, I've watched the TV, interest rates are going up, so it must come down. And I look at that, I'm thinking that's the dumbest thing that people could be thinking, because in some markets, yes, like the area where I live, I thought, okay, like $3 million, $4 million, $5 million blocks of land, they're going up by $1 million still, right? And it's like, how is this land going up by $1 million, right? And it's like interest rates going up, because it's not connected directly to interest rate. There's lots of other factors that play in, and yeah. So I think one of the other things as well, like we talk about, the long-term game. Like, I remember I was talking to someone the other day, and I asked him, like, what happened. I bought him like 3 properties. They've all doubled. Maybe like 5 years ago. Life got in the way. But I think he said, like, something happened, and he thought at one point, I bought the property and it didn't go up within 6 months, so he just let it sit there, right? And it's like, a lot of people think the property will double in 6 months or 12 months, but you need to have a strategy that's a long term. Like, I buy stuff today, I'm like, hang on a second, like, I'm looking at like the next 3 years, 5 years, 10 years, 15 years. So this is a long game. Whether it be interest rates, people are like, the interest rates, they're scared of interest rates, right? 30-year loan, 12 months in a year, so 12 times 30 is 360 months of a loan. 360 months of a loan. People are scared because the interest rates have gone up for 6 months. What about when they come down for the next 6 months, right? What are people going to say then? Okay, I'll start buying again. It's like, well, that's 12 months, 24 months out of 360 months. So it's like, 5% of the equation. It's like, you're going to base a decision on a short-term sort of scenario. So we'll get to some questions. We've got any questions, keep them coming through. Got Danielle said, Telstra outages over the last few days. This morning, I was on my phone to one of my brokers, like a motel broker that I buy from, and the phone just dropped out, and I tried hooking it up to the Wi-Fi. I was like, first thing I got onto Wi-Fi, I said, is my bill paid, right? It was all the first question, right? But no, it was paid. I paid it like 2 weeks ago. But I was like, why did my thing go down? And I see that there's Telstra outages now. So you've got Telstra outages, you've got Optus outages, you've got hacks, you've got all these sort of things. It's just very odd. It's very unsettling. It's why is this all happening at the moment? Lisa said, I can't hear you, Nath. I don't know why not. No one else has commented about that, but you can hear me now. Cool. Tyro Payments Company has just been acquired by Westpac. Interesting. What up, Wayne? You got some fans here?
Who's that? Catherine.
No, Praveen. Yeah.
Oh, okay. Praveen, there you go.
Catherine said, is that vodka? No, this is just water. This is just water.
I don't have my glasses on, so I can't read shit.
Okay. Chad said, can you please talk about covering covering expenses with rent? I've never heard you mention it, and how to approach it. I will get to that in a moment. Jonathan said, now that New South Wales got daylight savings, is in Queensland missing out watching you live? 6 p.m. is too early for us. Well, I apologise. I always say it's Perth that's a bit backwards, right? Not just the tight. No, it's like with the process is very slow.
3 hours behind now.
3 hours behind now, but imagine Perth, right? There'll be 4 o'clock over there. Facebook Live at 4 o'clock. But
watch it on replay.
I could sit up here and talk. I remember those times when I would hop onto a Facebook Live in the middle of Corona, at the start of Corona, at like 10 o'clock at night, and it would be like I'm reading bedtime stories to people. And I'd go and finish at like 12 o'clock and stuff like that.
That's how I fall asleep at night.
Really?
Just watching you on replay.
Oh, really? Okay.
Yeah.
Serious?
Yeah.
Okay, wow. Fuck. Sorry, Wayne. So, Yeah, I don't have any answer for you guys in Queensland. So, cool. I am still alive. Yes, I am. um, hello from Perth. Hey, Stephen. How you doing? Um, what do we got here? So, we've got here the question um, from Chad. Can you talk about covering expenses with rent? I've never heard you mention it. How to approach it? So certainly, when you are buying a property, you need to factor in all the expenses. A lot of people will just simply look at it and go, "Hey, mortgage will be covered via the rent and all that sort of stuff." When I look at buying any asset, I'm looking at the opportunity cost of the money, the capital that's being put towards acquiring that asset. So um, be it the deposit. So if I buy a property for 200 grand, the you need to put down a 50 grand deposit. That 50k that you have to put down, what could you be doing else with that? So if you're putting it in the deal, you're not getting cash flow, you're not getting equity. You could be losing your servicing ability. You could be tying up your finance capacity. The other aspect of it is, what is it doing for you from a cash flow perspective? So a lot of people will look at buying a property. They might spend 700,000. I've bought a nice house for 700 grand, and it rents for $500 a week, and it might be neutral cash flow, but then they haven't factored in land tax, council rates, water rates, etc. So when I'm buying a property, I want to make sure that the rent is covering the mortgage, the council rates, the water rates, the insurance, real estate agent fees. I want it to cover everything. So very, very important. Next question is from Daniel. What is your plan when the commies come knocking? The commies out there, they love coming knocking. So I tell them the same thing. Go get stuffed when they come knocking. But I don't know which commies. There's lots of them that come knocking. Doesn't matter if it's a regulator out there, whether it be a someone trying to take away your freedom and liberties or whatever that may be. You want to put as much control back into your life as possible. So I've always talked about living life on your terms. It's important to have full control of that. A few people are saying they've lost sound today. Look at it. It's saying they're losing sound. Yeah, lost sound. So I don't know, guys. It appears that everything is working here. I've only had a couple of people saying lost sound. Yeah. And Melissa said, Nathan, is there any way around the digital ID for our self-managed super fund, etc.? Look, I just don't do anything with digital ID, right? So I won't be setting up a digital ID. I don't need to. I'm not going to. Whenever something gets set up for me, I don't physically set it up. So I don't know how people go about setting up things for me. If I set up a new company, I encourage someone to go do it. I go, instruct someone to go set it up. I'm not personally setting up that, so I've got no idea. It's from that perspective, people being so you may be watching this thinking, what's Nathan talking about with the director ID? If you set up a company now, if you own a company, you have to go and register all your details. I'm not going to get into the full nitty-gritties of it because I don't even know myself exactly. That's why I haven't done it.
Transparency for the government.
Exactly right. So the commies out there are trying to take control of knowing every whereabouts. It is disgusting, and I think that people should try their best to avoid. They should be retaining their ability of privacy out there, and however that means that you need to do, then So apparently the audio is a bit jumpy, and someone said he'd gone back 10 seconds watching the stream. Audio is not so jumpy. Maybe it's due to the fact that daylight savings are in Queensland, Western Australia. Cool. So getting back to our questions here, property markets go through cycles. If we look at the Sydney property market today to what it was 10 years ago, 15 years ago, 20 years ago when I first started investing, very, very different sort of markets. If we look at the Sydney market like markets are counter-cyclical. So a lot of people think that property is just linear, like you said beforehand.
Mm-hmm.
Property, I just wait for the market to crash, right? Which market, right? I remember in 2003, the Sydney market turned to shit. 2004, market turned to shit. In 2004, the Queensland property market took off and went through a boom. Properties literally doubled and tripled in a period of 3 or 4 years in southeast Queensland. Whilst that was going on, the Sydney market crashed and burned, dropped by 20-30% over that period of time. So it's important to understand, like most people are trying to chase some sort of property dream of, oh, I've watched the clock, I've watched the property clock out there, I've, bought a block of land on the most desired hotspot square meter sort of app, property sort of app, and it's the best property out there. Don't be fooled by that stuff. The markets are not linear. There is no crystal ball to say what's going to go up, when it should go up. It doesn't just go up every year. It can go up, it can crash, and that's the fun part about it, and finding the opportunities in between. I certainly love buying stuff after the market. If there's been a catastrophe in the market, I want to be there. To the point where even if there's a cyclone gone through, I've gone and bought the cyclone removed.
Yeah, so that doesn't mean you stop buying and wait for it, because you never know when it's going to happen. So
I'll stop buying in a market when idiots are out there. When there's too many people buying in a market, right? If we're in
like Gold Coast, not buying at the moment.
Not buying the Gold Coast, not buying Brisbane. Yeah, straight up. We might buy 3 out of 100 properties there, but we're not buying 60 out of 80 properties in that market like we were when the market was crap. So I think it's important to be. I'm a contrarian investor. I go to the opposite. So if everyone is buying one sort of asset, then I'm going to go buy the opposite. And I think it's very, very important. So, yeah. Any other feedback on that one?
No, I just seize the day, and if you've got capital there, reach out to us. I guess we can help you.
We're always here. I think it's important to understand that when there's a good point you actually make there. Who was it? I was talking to yesterday. Your 7 o'clock meeting that you had for me yesterday. Yeah.
Yep.
They said to me they had 140 grand in their bank account.
6:30. You're late.
Oh, maybe I was late. Whatever it was. That. Whenever I spoke to the investor, they said to me that I had the money hit their account. That I had the money hit the account, and I didn't want to have it in there. I needed to get rid of the money because it was losing money for me, and that's a very, very important part. Because if you understand that the system is fake, you understand that the money is fake, you understand. Hopefully, by now, everyone that's been watching has a good understanding that we're living in the matrix. The money is fake, the news is fake, everything out there is fake. So we're seeing the devaluation of our currency. It's not that the markets are so great, it's not that the property is so great, it's not that we're the best property investor in the world, it's that we've got a currency that's losing its value, and then people will command a higher conversion to that currency. And once you have capital, you have the choice to go, okay, I'm going to hoard that. I've got 100 grand. I will keep the 100 grand in my bank account, and I will buy something with it one day. You wait 12 months, wait 24 months, wait 36 months, you can buy less and less shit for your money that you have. So once you get capital, I like spending my money before I have it. You know that. It's funny. It's like the story of Nathan's life, right? I like to spend it before it's there, because it's losing its value at a very rapid rate, and I think understanding how that works is crucial. And that's why our investors do so much great stuff.
Yeah.
So and I guess on the last part on that, everyone's got advice. There's what would be the
Mum and Dad.
tell me the three silliest ones you hear, right? What advice and why? Like people give.
Don't buy in mining towns.
Yeah. There's probably a good reason behind that, because lots of people lose their shit, lose their money over buying a property that's too high or whatever. But Yeah, if you're buying a property at 500 grand in a mining town, that is crazy.
That's crazy, yeah.
Yeah. If you're buying it for 100 grand where it used to sell for 500, well then you're making a meal out of someone.
Yeah.
So, yeah.
Like, I've had clients tell me that, you know, people can't believe they've got 6 properties, 7 properties.
Yeah.
It's like, how can't believe, how did you do that?
Yeah.
Yeah. It's too
Debt's
many.
bad.
Debt's bad, yeah.
Always think about why someone's saying something from an advice perspective, and always question as to not necessarily their agenda, because like you said beforehand, like mum and dad give advice and stuff like that. Like I know my mother, she would give me advice because she was doing it from a care perspective based on her knowledge base, but her knowledge base was based on a belief system where currency was a different type of vehicle than what currency is today. And I realised quickly that her advice was not in line with my goals. So I was like, hang on a second, I respect it. Yes, it's my mum. She's caring for me. She doesn't want me to get into debt. So I'd take bits and pieces from that and think, why would she, you know, be saying that? How could I use that to minimise risk? And still to this day, probably my biggest critic is Ridwan from One Path Accountants. And he's totally conservative, right? Most conservative guy that you'll ever meet. And he's like, Birchie, you know, like, oh, that's great. Like, keep pushing, do this. And I'm like, okay, cool. I'll see where he's coming from. And then he's every time he says it, he's like, man, I love you, right? But, right? Because he'll tell me where he's coming from. And I take that on board and I use that strategically. Like, most people will be like, okay, I better not do something. But I'm like, okay, this person's coming with, like, Ridwan has authority, right? So it's like, great, I want to know what his concerns are so then I can build that into my strategy. I want to know what my lender's concerns are so I can build that into my strategy. But are they coming from a place of sound advice, or are they coming from a place of emotional, you know, disconnection because they're worried for you because they might be, you know, they might have lost money themselves, they may have done this, they may have done that. So very, very important. Have a very good team around you, whether that be advisors, lawyers, accountants, planners, managers, whatever it.
Well, a big part of our business is referral business.
Yeah.
You know, and I get calls every week from potentially new clients that have been referred by family and friends that use us. So
yeah,
you know, they see what they're doing and they go, I want to be a part of it. So
spoke to one of your clients' referrals today.
Yeah,
we
did. So.
Cool. So on that note, Wayne, like you've got lots of investors that you look after and you've been a part of their journey. What would be your top 3 purchases of, you know, the last quarter, the third quarter of this
last
year?
quarter? Got a client who purchased in WA, 200,000.
Okay.
Only 10 minutes from the CBD, Perth. Revalued for 290.
Beautiful.
So
Beautiful.
that was one.
So 90k. When did they buy it?
August. July, August.
Yeah. Literally, start of the quarter, end of the quarter, they pull out the equity, they go again.
Yeah.
Cool. So on a 200 grand purchase, you put down 40k deposit, 10 grand closing cost, 50k, and you're pulling out, you know, 70k net. Yeah. Beautiful.
Yeah.
People want to know how it is to make money. You can literally just print money like that.
That's right.
Happy days.
Yeah. Another client, $190,000 purchase in Queensland, a unit.
Okay.
Potentially, it's valued at around 260.
Okay.
I haven't done anything yet with it, so it's recently just settled.
Okay.
So there's potential.
What sort of rent?
What was it? It's 290.
Okay.
290, 300.
Okay.
So, yeah,
cool.
Nothing confirmed there.
Deals are still out there, folks.
And a Sydney deal. Sydney unit purchase for just over 300.
Yeah.
Potentially it's worth 390. So.
Okay. 90k that as well.
Yeah.
Cool.
But the rent's lower in Sydney.
Yeah.
But it's more of an equity play.
Okay.
So yeah.
Cool. So people might be watching this and going, you can still tell me you can buy a property in Sydney for 300 grand. It's funny you say about that, because one thing I've noticed of recent times is that although the market has hit a peak and it has, you know, come back in some markets, I look at like Sydney. People go, "There's going to be a crash in Sydney," right? Sydney was one of those markets which was, over buzzed. But when we look at properties like a 2-bedroom unit for 300 grand, those markets are actually taking off, right? There's less and less stock. It's becoming harder to get our hands on that stock, just due to the fact of cheap money, and there's an inability for people to go and buy the bigger ticket items now because of servicing. If someone could service for $1.2 million when interest rates were 3% and interest rates are now 5%, they can only service for 900,000 or 800,000. It means there's a lot more buyers that are playing in that smaller end of the market, which is pushing up that lower end.
I also say don't be afraid to spend a little bit of money, like 5 grand, 10 grand on the property, just to
reno it.
Yeah, just maybe a paint job or replace some cabinetry or something.
Why's that, man?
Just to increase the rent.
Yep.
Cool. Because your rental it may take a year or two to get that rent back, but you're improving the market depreciation. So.
People want to know where you can get your best investment today, right? And if you're an investor and you can go and buy Bitcoin for 20 grand and it goes to 60K, you can triple your money and all these sort of things. Great. I like crypto. But when you look at that, there's a massive risk, right? Someone bought Bitcoin at 80 grand and now it's worth 30 grand. They've lost, 2/3 of their money in the last 12 months. But if you want to go and get your best return out there, then look at your assets of what you've got. If you have no assets, well, then you can't invest into this market, right? But if you have 10 properties that you've got, you could sit there and go, okay, I'm going to invest 5 grand in doing a reno here, 10 grand in doing a reno there. And if you can invest 5 grand and get $50 a week, if you can invest 10 grand and get $100 a week, that's like a 50% cash flow return every year. So in 5 years' time, you're going to get 250% of your money back. You put down 5, you get back 25, you get back 12.5 grand. So you're increasing your cash flow. You have the ability to, and I think a lot of people forget that, right? When they're trying to build, the people that are watching the TV, the people that are, not as clued in, that are, making mistakes and stuff at the moment with the risk out there in the market, that they're buying into the fear out there, but they're not looking at the bigger picture. Like the bigger picture and the strategy is crucial, because without having that portfolio, you can't increase rents, you can't do certain things, and it's interesting. Cool. And any other comments or notes for anyone tonight, Wayne?
I don't know. Just get in touch if you need a hand. Any questions? Reach out to us. So we can certainly do that.
What else have we got? Any questions for Wayne today? What have we got here? So Melissa said, do I have any advisor who would know, as Mike says, it's mandatory? Yes, they are forcing, right? They are forcing just as much as they forced certain things to occur to people, last year, right? They're forcing for people's identity. They're forcing for people's freedom and access to the information. It's a disgusting system. I don't think there's any advisor that's really going to advise, which I'm not an advisor, I'm just a crazy dude on the internet that talks random stuff on Tuesday nights with a glass of water or a glass of vodka, whatever anyone wants to think it is. I'm just saying my thoughts on it. I would be advised, by people if I need to, but at this point, there's so many companies, so many different things out there to play with. I just haven't done it, right? And I don't have the intention of going. There's so many things. If I did what everyone told me to do every day of the week, I'd get fuck all done, right? Literally, Wayne's laughing because we've got 200 staff in the business. I've got all red tape with every different type of business industry we're in. If we're thinking about, I don't know, Chinese restaurants that we own, there's all different things that we have.
The 3 pokies that you've got.
The pokies, there's more, there's another.
There's probably a license you need for that.
There's licensing for poker machines. Keno, I noticed, I looked in the bank account beforehand, money's dropped in from Keno, money's dropped out from Keno, right? if I did everything, I employ people to make sure I's are dotted, T's are crossed. But, in the bigger picture, um, yeah, like I know that they are forcing it. It is. I don't have an advisor that could give advice on that because they're all forced to give that advice, right? But you need to consider, the overall picture. What are they going to do? You don't go and say, "Oh, here's my director ID, whatever." What are they going to do? Come with fucking guns to your house, right? What are they going to do? Come and steal your children, lock you away? Like, it's a world that is, you need to. There's some lot. It's a very grey area. Let's hit us up if you've got some questions. Message me offline.
I find it funny because I've been watching your lives
Yeah,
for a little while now, and recently it was about the land tax that's passed.
yeah.
Now it's about the digital ID that will pass. So
They're forcing, right?
yeah, they're forcing you.
Everything that we do, right? This is like way off topic for property stuff, right? Well, I wanted to speak with property stuff. That's what I got Wayne on, right? But you've asked me questions. I'm obliged to answer them for you guys. You spend your time watching these videos and being a part of the community, so I need to. But everything you do in life is self-incriminating, right? Everything you're opting into a system, right? They said you must tell the Queensland government what properties you own outside of Queensland. Get the fuck out of my house, right? Like, I'm not telling you where to steal my shit from. Like, get out of here, fuck off, right? And I think it's important to understand that the system, that they're trying to take what they can from you. They're trying to take as much as they can, and giving them, it's done by force, right? You better do this or else. What else? What else? What are you going to do? What are you going to do? Take from me, right? But the system is trying their best to try and take as much. Like, it's their system, it's their problem, right? I'm not opting into shit, right? Force me, and then we'll have a discussion about it. But it's, a lot of people are being coerced into it. I just don't think it's it's not something that I would be opting into personally. And it says there's a $13,000 fine. Well, you got to find me first to get the fine, right? You got to find all the trail. What are they going to fine you for, right? It's like it's opting in. You're opting in. You're not opting in. There's like, why is there a $13,000 fine for not saying you've already registered your company? I registered to do business with you guys, right? That is disgusting in itself, right? It's disgusting. It's extortion. It's communism. It's fascism. It's totalitarianism, and it's a complete, abuse over your lives to have that. So there is, like, if you look at cryptocurrency, right, this is way off topic as well, but if you look at cryptocurrency, you could actually literally on some platforms set up your whole business and your whole life without the need of going to places like ASIC or the ATO or anything like that. I play in the system, right? I'm in the matrix, right? I'm playing in the matrix. We've been born into this communist, totalitarian, fascist system and society, but I play in that system. But you could technically take your business elsewhere, right? You are opting into these entities. So, what are they going to fine you for? Like, they're the questions you need to be asking. I know I didn't answer your question directly, but send me a message, and if you've got questions, we'll go through it personally. Julie says here, maybe a silly question, but what are government bonds? Very good question. Do a bit of research into it, but I will